The market's putting in a short-term top here at December 9th, 2024. And we are coming into the close of the session, and I'm getting a head start on prepping my trading charts for the next session. So I'm here in the E-mini S&P 500 futures. I'm going to start on a weekly chart, move down to a daily, and then a 60-minute time frame. So let's begin. On this weekly chart, you can see that so far this week's action is red, but it's again not even 1 day completed yet, and it takes 5 trading sessions or the whole week to complete this bar. So we're still respecting last week's range. So that's a tip for you, whatever you're trading, whether it's the E-mini S&P like me, the NASDAQ, the SPY, anything else. When you see a weekday, especially at the beginning of the week, make sure that you pay attention to the prior week's range. So in this case, 6036 is a place I'll make a mental note that, while we're above that, there's still some room for things to unfold. All right, so now let's go to the daily time frame. Now here's where I have my broader analysis. I have projections, I have forecasts, I have lots of things happening, and I'm going to clean up the chart a little bit based on some of the recent action. So we came up into some projected resistance here at 6081.25, as well as 6101.75. And I had been watching those as upside targets for the past couple sessions and sharing that in my S&P H Pro reports. So we are correcting after hitting a pair of projected resistance levels. So right now what you see unfolding was Friday's contract high, and then we have today's session again, which will likely remain lower into the 4 o'clock bell. Now I'm going to just hone in on some of the action unfolding here. We have a bar that was outside the range of the prior session. So the December 6th bar was a higher high and a lower low than December 5th. And we're pulling back, and you can see that along the way higher with this was this December 3rd doji. That's a special type of candlestick. So the low of that level is also important to monitor. And remember, we had talked about 6036 from the weekly chart. So I'm just going to put in a little zone of support there. Now what this means is that, sure, the market's turning lower right now, and there's room for it to continue to weaken. From the perspective, though, of this uptrend that's in motion, we need to see a push below this zone to keep really picking away at the gains that have been in place since November 19th, okay? So having zones of support when the market's falling or turning lower that you watch and you monitor and have built into your plan how you're going to monitor them, whether it's just an intraday break of the level or a daily closing break, that will help you not get overly, completely 180'd and swing to the other side of the pendulum just because there's some weakness. Because look back at this day here. It was a red day on November 27th. That was the Wednesday before Thanksgiving. And then by Black Friday, everything was up again, okay? So that's what I have on the daily chart, and that's where I'll keep it for now. You could start to draw forecasts as well. So let me show you one that is emerging, but the thing is, it doesn't have all of the time aspect to it yet, so just keep that in mind. I've zoomed in here before I reveal the forecast, and here's what could unfold, okay? If the market continues to weaken off of the December 6th high, based on the relationships present on this chart between price and time, we could see continued weakness until December 16th. That's what this purple vertical line marks. So that's the time aspect of the forecast. And down to the price 5912.75. So the intersection of this vertical line and horizontal line is representing the forecast, and I calculated it on my own. So I get deep into how to do forecasting in my loss forecasting trading system. So let's bring the chart back again so it's not all spread out. And now you can see this is like a little magnet pulling the price and time to it. There's no guarantee that the market will get there, but at least now I have a guidepost if the market continues to weaken from where it's at, okay? Now I'm gonna open up my 60-minute chart, which will have the annotations and lines I put on it into this morning, and then I will prepare it for the next session. So here is what my chart looks like now that action has unfolded. So I published this into the 9 a.m. hour. So it's 9 a.m. New York time. So this doji right here is what ultimately formed. You can see that the market started to turn lower after consolidating for a bit, pushed really far down, and here's where we are. Again, the market hasn't closed yet. So if I want to begin this preparation while the market's open, here's what I would do. So the first thing I would do is look at my analysis for the day. So I have this on a separate screen where I have my Skinny and the Mini report that I wrote for myself and my subscribers about what was likely to happen today. So save out a copy of that, change it to Tuesday, December 10th, and then begin to actually look at what unfolded. So I'm just going to narrate this as I have it unfold. So on Monday, December 9th at 8:27 a.m. Eastern, gray vertical line marks the hour ending 9 a.m. So that's what you see here, right? I wrote, and here was my outlook. Abbreviated, okay. So I had outlook that the futures would continue higher. And it was for scope for recovery back towards the high of this doji. That's what I was looking at. My alternate scenario, though, which I always present, is that if futures instead trade lower from current levels, which is what happened during those first hour of trading, below 6088.5. So I provided the marker. Okay, it wasn't like I'm waiting till down here to say, change your tune. Below 6088.5, so I'm going to mark that as a gray dashed line. That way I know it's a support I discussed that was relevant to the action. Quote unquote would risk 6085. So that's this level right here. So since I talked about it in my own report, I'm going to annotate it. Ahead of 6076, that's this low right here, 6075.25, that's this low right here. So as you can see, the market kind of wavered through all of that. So I'm just going to straighten out these lines because they're the guideposts of what unfolded. So I'll move the 6076 to the low that was broken, add a line, and same thing for the 607525 and remove the pink horizontal lines. Now you can see that the market weakened even further than what I had written about here. So I'm going to kind of take a bigger picture view here. Remember the 6036, that was from the weekly chart. It shows up here. Also, the 6047.5 from the daily chart, that already exists here. So those supports are already detailed. And I'm going to now just delete the ones that were traded through, but that weren't specifically mentioned in the report, okay? And I'm talking about how I do this in the report, guys, but when you're doing your own analysis, whether you're sharing it with others like I am or doing it for yourself, this is an excellent practice as to how to evaluate what happened, whether you were on the right side of the market or not. All right, so now I'm going to hone in on this whole move from 6000.25 to the contract high 6111. So when I come in to do my report for tomorrow, I'll probably describe all the reports down to this key level 6000.25, and the chart will probably end there when I publish the report. All right, so this is now how I recap what happened, okay? Futures traded, or futures, I would say, consolidated beneath, and this is where I might need to add a new level, 6098.75 through 10 a.m. Eastern. They then plummeted. That's the kind of action that I see when I see a red candle like this long one. Lower, beneath 6085 through, to violate, because we're going down, 6076 6075.25. So now I've just captured what happened in words and in the picture, okay? The next step is to get any new resistance levels or adjusted support levels in place. Now all these labels tomorrow, by the time I publish, I'm gonna want to scooch them out of the way further. So I'm not gonna move them all now because I'm gonna have to move them in the morning anyway. But I'm going to adjust some of the support levels and resistance levels. So 6101 was the low of this old doji, but really the more significant level is now 6098.75. So I'm changing that on the chart and in my report. 6098.75, and the descriptor is intraday lower high. All right. Then that 6088.5 old bottom, well, that looks to become resistance. So you can have a support level that's taken out and then immediately becomes resistance. 6088.50, intraday old bottom. And if I want, I can also add in this lower high, 6083.25. Could we recover and trade back up it in the overnight? Sure, but right now this trend seems pretty clearly wanting to change down. So I'd rather capture it in there and save myself time in the morning. Okay, intraday lower high. Now, my next support is 605575, then 6047.5, 6042.5, 6036. Then I've got others here that I'll get my old descriptors for. Okay, so now I have those 602975. Again, they're all going to be removed tomorrow, or moved again, I should say, tomorrow. So I'm not going to stress too much about their placement right this second. All right. What I want to look at now is, besides the forecast I have and this support zone, what are other support areas that are important on this daily chart? Well, one of them would be the retracements of this entire leg of action. And I would mark that with pink because we're looking at supports. So right off the bat is 5984.14. That's the 50% retracement, or 5983 actually, if I have the anchors in the right place. I can also look at other GAN retracements related to this. And remember, this is still weakening. Market hasn't closed just yet. I drew this on the daily chart from way down at 5855. On the 60-minute chart, if I try to go down to that 5855, it's way down there, I can squish this all up and give myself perspective on what's happening on the 60-minute chart. This is very useful because it shows you the detail of that whole daily move, right? So one thing I can see is that already, right now, we're more oversold than we have been in a long time. The last time we were this oversold was on November 19th, and November 19th turned into a bottoming formation. So that's why in the short term, if you're not already short, it would be not prudent to just like go put on a bearish position right now, because we're already so oversold on the intraday 60-minute. It might be safer to sell on a recovery rally if there is one, okay? All of these labels, I'm gonna just sort of bring them to the forefront right now, but I'm not gonna worry too much about, some of them I'm gonna delete actually, but I'm not gonna worry too much about putting them in their exact place. I just wanna get them scooched over to present time so that if I decide to reference them, they're there. Okay, not every one of these is gonna be significant. The last bit is this old trend line. I feel like it's done its thing. It was a very useful guide in this uptrend. Then the market stayed beneath it as resistance, but now it's sort of coming on. So I will remove that from my trend lines and see if there's any new ones to bring in as the price action unfolds. So that is how I get ready for the day ahead. Usually I do this after the market closed, but today, given the weakness, I did this while the market price action's unfolding. And that what I would do in the morning is come in and revisit everything again, see if the market's moved any further lower, if it's recovered or anything else. Now, Your question that I think is bouncing around your head is, well, Hema, is this a significant top or is it just a pullback? I don't have a crystal ball, so I don't know. But what I will tell you is that I will monitor the action intraday, short term, daily, weekly, and share that every time I publish my research, which is minimum 3 times a week. And I also will demonstrate this in the trading labs that I'm holding. So I have 2 labs this week for our SNPH Pro students. I also have a bonus one for our Gang Candlestick students. So if you want an opportunity to see me trade live and apply this analysis before we get into full swing Christmas season, this is your best chance. And yeah, I hope that was a helpful look into how to handle when the market's beginning to turn, and you can use these skills like techniques in the future. So if you like this information, go ahead and subscribe to my channel. I'm Hema Reddy. I use price action like you saw here, market timing and momentum or forecasting to boost my trading and that of my tribes. If you have a positive takeaway from this video, please give it a like or a comment, subscribe if you haven't already, which I think I mentioned, and I'll catch you soon.